Okay, guys. Today is November 21st, 23rd. First of all, happy Thanksgiving for everyone. Uh, Even though we're gonna have most of the regular schedule tomorrow, but the out days they're gonna be faster. Probably we don't outdate the 4 hours because it's not needed. And technically, tomorrow U.S. session should end around 11 a.m. New York, because afternoon is going to be extremely lower onto Asia kick out at the afternoon, and then Euro take over again. Remember, Thanksgiving is a U.S. holiday. It's not like Christmas. Christmas is more international, but Thanksgiving is more U.S. holiday. So we're going to try to cover right there as best as we can, that we always do every year, and going from there. So technically speaking, we're going to start as always with the correlation of the market, and we're going to start today with this is the S&P cash. The reason that we're going to start with it is because it looks scary to the downside for the global wars. Nothing new that we was, and I want to be clear about it, guys. I've been telling this every day. Our bias always been the same. S&P to 450 point, oil to $25, $30 a barrel, euro to around 114. That's been the bias for a while. Now that we play the intradays and the day and the 4-hour swings, absolutely. That doesn't change anything. So it looks scary when you look at the cash, that idea that they have 1, 2, 3, 4, 5 swings, as we know, a recovery. And this part right here, most than everything, this part right here can be labeled as a clearing pulse. That part right there is a clearing pulse that is ending. Now, and the correlation, technically, all depends on whatever the thing is right here, but nobody have, like I say, nobody have the Holy Grail right now to go and say the world market is going to crash or anything like that, and I won't do it either. I just gonna trade her, and the service is gonna take the same approach that we always have. Trading smart and try to wait for the bounce to dictate whatever is going to come next. Dreams and other stuff, it's not with us. So technically we have a 5 and we have a 5. This is a 3 at this stage. That's a 3. This is a questionable 5. I can show you guys why. And only a truncation can make this a wave 2. This move is not a 5-way move. So technically you have to go with a truncation that goes 1, 2, and the drop lower. Now, having said that, let me put to you guys as a general information the risk assets of the world, if we can put it like that, and we're going to put the euro on top of the cash. You guys see, you guys can draw your own conclusion, how well correlated they are. Right here, the euro was leading to the downside. That's maybe why the euro got some kind of sideways this week until today that broke down. Now the S&P is cashing out again, but again, like we said yesterday, and this is a thought that we have yesterday, and I cannot avoid it, is this. You got to trade with a plan. And sometimes the plans come out to be correct. Sometimes the plans come out to be wrong. That's exactly how it is. Now, what I'm trying to say here is as follows, that we entering when the euro was right here, everyone was thinking that this was a B way. All right. I was telling DV in about an hour ago that this move is in 7 ways. So that it's a big way? Well, if you listen to the news, if you listen to the fundamental coming out of Europe, automatically everybody gonna say, no way, these things won't go here. Well, now, my advice to all you guys is, don't think about it. Let it happen. What I mean with that is, if it's gonna get here or if it's gonna get here and it's gonna go lower, do not matter to any of us. We don't have control over it. I mean, technically speaking, all you need to do now and you need to concentrate is one thing. The euro from here to here, there is a 7-way swing when you have a triangle in the middle. Technically speaking, triangle trust, they are 10-minute move, which means that a sharp reverse is coming in the euro. Now, I'm going to get into the detail pretty fast about the euro, the S&P cash, all those pairs, but I want you to understand how correlated they are, how they're trading to the downside. Now, let me add another one, which is oil. And oil is very interesting because the decline, it looks corrective. In my view, the decline in oil, it looks corrective. And the decline in oil can be the case for a nest, or can be the case with the count that we're showing, which is A, B, C, W, S, A, B, with another high to the 106. Now, that's oil. You see also now it's joining the part of the reservation here. What else do we have? Okay, the US dollar index, of course, is going to trade inverse. In other words, if all those risk assets, they are trading lower, it's obvious that the US dollar is going to trade higher. Now, this is when I want to start getting to the correlation point of the seminar. Look at the highs and the lows with the cash. Same highs, same lows, same highs, same lows. Now, the US dollar index, it has a very tricky structure. In my view, it looks corrective. In my view, it's due in a strong correction to the downside. But even clearer that the US dollar index is the 5-way swing that come from the 1270 area in the S&P cash. And after 5, a recovery is coming, as all you guys know. And finally, let me put copper in top of that, and again, corrective to the downside against this swing. So I've been receiving a lot of questions today, emails everywhere, asking me if we still see the euro about 142.50. And I've been giving everyone the same answer that I've been giving. I've been saying for the last, I don't know, 3 days. Do not matter, guys. Do not matter. We were covering our counts has been correctly almost to 100%. We were calling the triangle on the euro same Monday before anybody even talk about it. We were calling the triangle there and the big way, and we knew, and you guys can listen to the seminar on Sunday when we say that the low at 34.22 or 28 or 18, I remember, is going to be broken before 142.50. That's the power of the wave. That is hard sometimes to get the move. I really understand that. And this is a risk that we're taking in some degrees because like I was talking to DV this morning also, That's one of the reasons why nobody provide trading signals. It's very risky to cash, because believe me, the people that do not provide trading signal, it's not because they don't want to, because they know that providing trading signals is when the money technically is for clients. They don't do it because they know how hard it is. All right. So getting to that, I would keep the same bias. I mean, that the bounce is about to happen. Chasing the dollar at this stage is very dangerous. And more than that, I would say this. The S&P cash is an excrement that is coming in the bounce. You have to go step by step. And then if the bounce proved to be corrective, what we were expecting on the dollar last week, a bounce around 34.20. Remember? Now, that bounce on the euro dollar right here, the same with the dollar right here, it proved to be corrective. When the bounce proved to be corrective, then you go to the next swing. And that's how you trade. So technically speaking, I believe this. I believe that the move that started in the euro or started in the dollar on October the 30th is exhausted and is due a bounce. Now, the nature of the bounce will dictate the daily and the weekly counts in the dollar and in the euro. Nobody knows for sure which one is going to go. All I can say is this: a bounce coming, chasing the euro. We'll be calling the count this morning perfectly. I hope that some of you guys took the trade. We were saying that the euro should be sold from 60 or 70 with a high at 34.14. It gets what? It gets to the 33.70 and it dropped. I hope to a new low. Those are things, guys, that I want you guys to appreciate in a way that it's not easy to call the market. It's not easy, and we are very proud to do the job in the right way. So technically speaking, guys, in the correlation world right here, nothing outside of the 5 ways of the cash say that this is going to be a huge move. Now, my advice is going to be the view of Elliott Wave for cash. Take the wave by 3. Now, what I mean with that is putting back the dollar here in a sense is this. Right here, we were calling the drop. The drop happened. Now, the drop means to be that it was, let me put it in 9 hours so you guys see it better. Right here, we were saying a drop is going to happen. Guess what? The drop happened, and it came out to be in 3 weeks. Now, looking at the 8-hour charts, I have to say that, even though you guys, do not pick the top on the dollar, guys. That's dangerous. It's better put in this way. If a drop is going to happen, whatever drop it is, it won't be in a straight line. Whatever drop it is, it's going to start with something like this. So right here, you don't have a defined risk. You have to enter with the generic stock. This looks vertical in that degree. Same looks right here, so don't get scared about it. But I can see from the lows, like I say, I can see 1, 2, 3, 4, 5, 6, 7 swings. When these swings can be a triangle. Let me go a little small right here so you guys see it. When you go 1, 2, 3, 4, 5, that can be a triangle, but that also can be a trick. Do not rely in the idea that it's a triangle. I mean, the dollar is not as clear as is the euro. All I can say is we are favoring the triangle. We see in the RSI, and then we still see divergency. We see 1, 2, 3, 4, 5, 6, 7 swing. The triangle makes, yeah, but then that's what I say, lose better on the dollar and the euro dollar. But if it's not a triangle, how you doing, Raji? If it's not a triangle, it can be the diagonal starting from here, but it break above. So, and then it's 1, 2, 1, 2. But then what's happening is if it's 1, 2, 1, 2, then this thing is going to get higher. And then the euro is going to keep going lower because the dollar is going to top and the euro is going to bottom. Until the dollar doesn't top, the euro won't bottom. That's my whole message. I mean, because the triangle on the euro is why we're doing this, because you can label it as a triangle. 1, 2, 3, 4, 5, and then label right there a pretty nice triangular structure. Starting from here, you can see 1, 2, 3, 4, and 5. I mean, there is no reason why no. It's a triangle there. You can even see it here on the RSI. But like I always say, triangles, they are very tricky, and triangles sometimes become a nest. The good thing is that I don't like the nest because this is a three-way. And this is another three-way. You know what I mean? That's why I don't like the nest. This is our two equal legs right there, almost to the peak. And the RSI, the high is the high right here. So technically that's a 3. The same with here, the high is the high. Technically that's another 3. So for me, it's a triangle. I got it to be, look, this is a three-way move right here. High is the high. This is a three-way move right here. High is the high. So it's a serious sideways move of three ways that ended right here, and then from here you have 1, 2, 1, 2, 1, 2 with a flat, and then 1, 2, 1, 2, and then there is already divergency, but you gotta be careful because if it ended here, this all can be wave 1, and then you can have 1, 2, 3, 4, 5, and that's what we say in our more bullish, bearish US dollar account. It range between 1 more low or 3 more low, depends on how you label the move from the downside. So technically speaking is this, guys. We keep the same buyers. Now, we keep the same buyers when we can go. We know that a bounce, a drop in the dollar is about to happen. I mean, we haven't been calling that in the whole week. We've been saying that the dollar is going to make a new high, that the euro is going to make a new low. But at this stage, I believe it's safe to say that that the move is going to happen. The area that we will be calling the whole week, which was around the 78, 80, 78, 60, 79, it was reached today. But, I mean, you have to wait before take short position. Do not pick. Picking is risky, in my opinion. It's dangerous. Now, looking at the daily on the dollar, you guys can draw the conclusion here that, like I was talking to James this morning, and anything is possible. Anything is possible, guys. I want you guys to understand. Anything is possible. This can be 1, 2, 3, 4, and make a new high and be the 5 in a leading diagonal. This can be A, B, C, 1, 2, and now go here and make another high and start coming out of the lows in the leading diagonal. The dollar do not need to go higher in a 5-way move. This is the weekly. And look, I mean, it's hard for me to count the nest, to be honest with you, because if this is the nest, I believe that it should have going higher, straight higher. But this can be, remember, if you take a look at the weekly on the dollar, it can be many things. Do not need to be an impulse. Technically, this can be a steer away for triangle, and the dollar can go right here and drop again. Who knows? That's why we have 3 different counts. That's why we have 3 different counts on the daily and the weekly on the dollar. But keep your mind open to, I mean, after 3 backs, a continuation to the upside, very possible on the dollar. Now, any question about the dollar before we go to the individual, the dollar as an individual pair and the rest of the pairs? Okay, 1 second there. We're going to start now with oil. We're going to start now looking at oil and the most important things in the 1-hour chart. What happened here? One second, guys. Okay, this is oil in a 1 hour. Look, guys, it looks corrective to the downside. It looks corrective. I can count 1, 2, 3, 4. You can make the case with the 5 swings. Even I don't like it. For me, it's corrective. That's what I keep saying, the same things. I mean, I'm not that bullish on the dollar at this stage. And to be honest with you, at this stage, I'm not bullish at all. I believe that it can go higher, but before I become bullish, I have to see the drop from whatever top is created. So oil is looking corrected to the downside. The same with copper and the same with many of the risk, I mean, many of the risk assets. I mean, oil did not make a new low here, but this looks corrective also. That's why we're laboring as an S-way here instead of going with, I mean, it's no imports to the outside. So I think that it's going to keep going lower. But remember, oil, there is a count when oil do not need to drop. It's an import. Now, this is a totally mess, which is the S&P, the mini. It's imported. I mean, it's moving down, but I don't see it as an import. I got to be honest with you. I was talking that with DV yesterday, that there is no way in this world that you label this as an impulse. That is fast, yes. That have dropped, yes. But it's not an impulse. So I don't know how. I don't know. I mean, when the market gets like this, guys, as an advice, it's better for each one of you to start thinking, I mean, waiting for data. It's better wait for the data because, I mean, it's a lot of, I mean, that's the bad things when you miss a move, that when you don't realize it's too late to jump in, and then when you try to jump in, you get out of the market in the wrong side. But this looks corrective to me. I mean, I have my own question about this to be a 5, and then this looks corrective. It is dropping, but I challenge everyone to count it as an impulse. The cash is very clear. I do not deny that. And that's why I say we need to see the recovery on the pairs before drawing conclusion. Now, let's move on. The same with copper. Look. Let's move on to the individual pairs after seeing copper here. I mean, same scenario. 3 back. Now, I want to be clear about it. Any of these pairs needs to drop in 5 weeks other than the S&P. S&P needs to drop in 5. So keep that in mind. Now, let's move on pretty fast to the individual pairs. And I want you guys to ask me questions after about any pairs, what I think. I mean, okay. This is the S&P cash with the label on it. You guys can see how, again, a question number 1, and I keep saying a question because this is what I see. 1, 2, 3, 4, 5, 6, 7 swing. And then A, B, and Z as a truncation. This is not a 5-way swing. Don't care about anybody believe or laboring. This is not a 5. This is a 3-way move. And then if you put the RSI, you guys can see that here is giving you divergency. You guys can see that is not supporting the truncation here. But well, that's the least of the matter. All you guys need to worry about is this. That from here, it looks like 1, 2, 1, 2, 1, 2. Now it goes 3, 4, 5, and then goes 1, 2, 3, 4, 1, 2, 3, 4, 5, 3, and then you goes 1, 2, 3, 4, 5. So technically, it's divergency. Technically, it looks like 1, 2, 3, 4, 5, 6, 7, 8, 9 swings are completed, which means that some type of bounce is happening. Same things. You guys know already how correlated this pair is with the S&P. The S&P is with the dollar. So meaning that if a bounce is coming on the S&P, guess what, guys? The dollar is going to get weak, most likely. So as an advice, don't dream about either what strings on the market, neither dreams about 128, neither dream about 144 on the euro. Dream about this. As a smart trader, I need to see the recovery. If the recovery is powerful, start thinking that this was an S wave and the S&P is going to go higher. If you put this pair, let me take the labels a little bit, it's being powerful move to the downside. I believe that, nothing is technically clear in the market, never. This drop right here has their own questions too. And look, it drops. Let's see, 1158 is the 618 of this move. I know for sure that some bips, they're going to start coming here. Of course, the whole world is bearish. If you see this level to pass without any type of, or the bounce looks to be corrective, then you're going to see, and that's the area when you're going to turn completely bearish and bullish US dollar. That's my humble opinion. Anyway, if you take a look at the weekly chart, and if the weekly count is correct, S&P, guys, believe it or not, most of you guys should know about it already. S&P is here for a huge drop that should take it to around 456 in the S&P. That's a debacle. That's a disaster. But well, that's what Elliott Wave is calling. Now, nobody say and nobody know exactly how it's going to get down there. Nobody know if this is the top yet. All you have to do is play the probability game. Right here was a great short. But that's the way it is. Sometimes markets are more clear than the other. This is a weekly chart. I know that the candles, they are scared. But it looks very bearish right there. I have to admit it. And I'm not saying that, let me put it this way. I'm not saying that cannot be possible. All I'm saying is that as a smart trader now, this is what you need to do. The bounce is coming. When the bounce happens, you have to take a look at this level. This is what I'm doing. It's at the 2% of this leg, and it is close enough to the 1.618 of this leg. Also, you got to take into consideration this count right here, which is around 1142. Around that area, you got to take into consideration the bounce. And when the bounce happens, if the bounce is corrected, then start thinking about, a possible move strong to the downside. Now, technically, there is 5 ways coming from here, and that should be enough for any bull, for any bear to take profit of thinking that is possible. Before I leave the S&P, let me show you a thing that I bring down to my mind, which is as follows. These 3 and 4 did not reach my 23.6 from here, only the 14.6. So don't take as a possible scenario that we are still in wave 3 right there. And then we ending wave 3, and then we're going to get a 4 and a 5 before a big bounce. So keep that in mind also. Now, let's move on to the euro. Any question about the S&P? Let's move on to the euro. Like we said last night, I said it basically on the video. On the euro and the 8-hour Okay, this is the 30. 1 second. Okay. Okay, technically, nothing has changed. We were calling the whole week that the euro is going to trust either from here or a little higher. To be honest with you guys, DV knows that for a fact. I really want to see euro going to 136 because that's going to take away most of the bearish side, of the bullish side. It didn't happen. Still, euro can be many things, and only a strong move, vertical move, can be called as a beginning of wave 3 of 3. I don't deny it. All I'm saying is that with this RSI like this, most likely this is going to look corrective, and most likely a bounce is going to happen in the euro. Now, that this can be this bound, who knows? That at this stage, the way the fundamentals are, even though I don't believe on it, it's more reasonable that the bound goes to 37, 38. Yes. But it's undeniable is this, that from here you have 1, 2, 3, 4, 5, 6, 7 swing. 7 swing is corrective. And even an 8 and a 9 is going to be corrective. You know why? Because this cannot be laboring as an impulse. Now, it can be labeled as a nest, 1, 2, but this is a triangle consolidation. I can go as deep as you guys want, and I can prove it to you guys that this is a triangle. If this is a triangle, you have 2 counts, A, B, and then 1, 2, 3, triangle 4, and a 5. That being the case, if it's a diagonal, then it passed the 46. You got to mention the equal less right here, 32.20, but that's going to break the diagonal. I don't favor the diagonal at this stage. At this stage, my preferred count is as follows. I mean, this has changed. Don't you see it? This doesn't have the, and DV, don't you guys think this has the looks of the truss of the triangle? It has, at least in my eyes, I don't know what you guys think, at least in my eyes, it has the look. It has completely, you agree, DV, right? I mean, a truss is a triangle. It's like a little things coming out of the consolidation. So that's what I think. I believe that I'm falling in love exactly. That's what I say, and we've been saying since Sunday that this low right here, I mean, to be honest with you, DV is saying that if we break that trend line, can get some legs to the downside. I totally agree, but to be honest with you guys, I'm looking this more in the euro case, like I'm falling in love with this count. I'm falling in love with this count. Let me see. I'm falling in love with this count. I'm falling in love with that count. And we present that count over the weekend, and that's the one that I'm falling in love. And that's being the case, we are into the W. When equal less, I mean, we are around the area right there, but it can get more downside. And that I'm falling in love with this count in the way that, I mean, I don't say no. Yeah, it can extend. It can extend to 30, 40, exactly. That's what I mean. That's what I'm trying to prove right here. That if that being the case, it collects come around 30.51. Now that the move from the triangle, the way structure for the triangle is not supporting that, neither is cable. But never say never, like I told Rafi. But I'm falling in love with that discount. I'll show you why. I'm falling in love with discount, and it goes very. I mean, yes, exactly. But this goes very well with whatever is happening in Europe. But for discount to happen, then the S&P needs to be topped, and the S&P needs to acceleration to the downside. Now, the big question here, the big F is, well, that's in the future. How is going to trust into the E-wave? There is another count that Jane shows to me that is something like ABCWS, and then we're going down now into the S wave also. So getting back to the point, DV, or why do I say that? This is the 1 minute, the 1 hour chart. I mean, everything is a 3 right here. Everything is a 3. I cannot believe that I took a short right here and I close it here. No, right here. That frustrated me. But well, I was thinking about the C way high. That technically, you can see a 3, a 3, a 3, a 3, and another 3. Now, technically, the triangle trust started here. Let me put the candles so you guys can see it. And let me see the RSI. The RSI already showing divergences in this. So you have to wait to look at it. And I want to go very deep. I know that some of you guys are in the trade of the euro. I see 1, 2, 3, 4, 5, 6, 7, 8, 9 swing. Now, there is a very interesting point right here, which is this little area right here. If you go into that area, you have to get with an social. It can be like the dollar. It can be two ways. It can be 1, 2, 3, 3, 4, and 5. And then technically wave 1 ended here. Wave 2 ended here. That being the case, we should be ending right now wave 3. That's one scenario. Look to the peak right there. That's like the euro, that like the dollar is showing. Now, going small, and then wave 3 of 3 is the lower rate. It's going to be another consolidation and another low. Now, going back, I mean, the only way, David, like you say, the only way that it's going to stay lower if this is wave 1 on a truss of the triangle. That's the only way, but I doubt it that it's like that. Right here is what really matters. You see, let's say the less bearish, I mean, let's say that this is how I have it here. 1, and then 2. No, all you need to do is, yeah, I agree with that scenario that you're saying there. Now, Let's say with this, you got 1, 2, 1, 2. And then from here you have 1, 2, 1, 2, 1, 2. Right here you close a cycle. This is a 3 of 3 of 3. You see it's the lowest read in the RSI. Now you have 1, 2, and then everything comes to the idea that this, it can be seen as a complete wave 4, but also this can be seen as right here is 1, 2, 3, 4, 5. Now if we take it, remember we are in this cycle. It goes to the 3802, so it's a given any one of them can be the case. Now the thing, I would call it a flat if I can see 5 swings here, but this move looks like a 3 also. Now let's go with the less bearish one, and then let's call this another cycle close, 1, 2, 3, 4, and a 5 here. And then you have 1, 2, 3, 4, and a 5. And then that being the case, you close that cycle. And then 1, 2, let me see. Yeah, it's that one. You got 1, 2, 3, 4, and a 5, and then you closing this cycle. So technically, I believe that either way, one way or the other, I don't know if you guys agree with me, one more low minimum is needed to end the cycle from 135.42. Don't you guys agree with me? Why do I say that? Yes. Because if you go and you want to be the less bearish one, then you have to say 1, 2, 3, 4, and 5. That's very possible. That being the case, I'm sorry, my bad. That being the case, this is your wave 2. And now he's at the 618. Yeah, I think that the next low, I think, yeah, exactly, Raji, and I agree with you. Being short, unless you got it from here, all you need to do is you got it from here, boom, boom, with the stop to the top of the previous 4. But it's better to fade the next low than anything. Now, cycle-wise, if you go like 1, 2, 3, 4, 5, then you go 2, this is 3, and then he's going to go back to the previous 4 area pretty soon, to around 33.74 area, something like that, and then the final low. But if you go that way, if you go the way that I have it in the money, and then what we've been saying on the room, then you have to go this way. If that's the way, you can count from here 1, 2, 3, 4, 5, 6, 7, 8, 9 completely wave. So technically completed. And then you have 1, you can label this as an irregular 2, is supported here as an irregular 2. And then you have 1, 2. What I don't like is that the low wasn't any type of FIBO, and then you have to the 23.6, and then technically you need one more low also. So either way, I believe that another low is a given in the euro. Minimum, another low is a given. I mean, if you ultra bearish, you can make the question that say that this is one, that this is one or wave 5, but I doubt why wave 1 of the trust for the triangle. I know that the euro pound in some degrees is supporting that scenario because it looks like it probably is nesting, but also James mentioned, he did it for me right there. Let me get back here a little bit, 1 second. Let me take some lines from here like this one, like this one, like this one. It doesn't matter anymore. If it's a double zigzag, the first two legs, they were almost to the 618. Right now, look, we are at the 618 area right there. So, it can go many ways. Can go 32.30, 32.20. I think that the next low is gonna come in line with the trend line right here. Don't you guys? Don't you guys agree with this trend line? Looking at this, no. Anyone is entitled to hold the, that, technically that trend line means nothing, guys. Don't you guys understand? Technically, that trend line, I don't think it means other than the diagonal, that means nothing. Exactly, that means nothing. And technically doesn't mean anything, in my opinion. Only that, but the thing is this, that I cannot go, yeah, but the way it's structured here from the trust is very limited, in my opinion, unless it does this. And I doubt it at this stage. But well, like I say, that's the point of view that I have. I'm trading based and a thing that I've been doing for 11 years, and I won't change it, to be honest with you. Is this. As far as this is like this, I can get run the data to you guys, and you guys can see that any breakout move doesn't come like that. But corrective move come like that. But well, I don't want to get it. Anybody is entitled to have to their own opinion, to their own bias. That's what I mean. I'm trying to do the best in the way that, for me, that trend line there means nothing. There is no acceleration. You got a triangle in the middle. You have a triangle in the middle, which triangles cannot be wave 2. So technically, it's not a nest to the downside at any degree, and it is corrective. Now, corrective do not mean this. That can be still lower. But from here, from 35.40, it looks like one more low is going to be done. And I cannot call this a nest because it's not a nest. This is three-way move. As clear, even my daughter can see the three-way move right there. I mean, this is a three-way move here. This is a triangle. So I would say to the downside, I'm going to tell you for last time the measure numbers. 37, 130.47, I doubt it. 32.26, likable. Current area, likable. What it means that should the dealer, or if I still can see it as a B, that's the question, Jakut. Yeah, exactly. I mean, like you watched last night video. I mean, I don't know. Sometimes I'm in another planet. Sometimes I really do. Because if you enter here thinking about a B way, why change it? Now that you adjust, yes. That the language is not the same, yes. That that the whole market is bearish the dollar, yes. But I guarantee you that if Elliott, the guy who invent whatever discovered Elliott Wave or developed Elliott Wave, he see this price action is gonna put us a corrective. Any question about it? Because that have nothing to do with an impulse. Zero. So why doubt yourself? Don't doubt yourself. Don't doubt yourself. This is a corrective move in every single pair. Now, that do not mean that when I was learning Elliott Wave, I remember, guys, I have a great mentor. And the guy always showed me and told me this. And I want you guys to understand this. Always trying to count the simple way. And that's an advice that I keep repeating. Always laboring as the simple way. Never change your rules. Always use your same guidelines. And my guidelines understand. And it's unfortunate because any member have a different view. And I mean, I don't need to agree with everyone. We are providing a service, and then everyone is entitled to say, this guy is wrong, I'm going to sell the euro, even if he's saying that it's going to bounce. We've been saying all week, sell the euro, because we have known that this law is going to be broken. We knew that as far as we knew the recovery here. Now, today at 3 p.m. New York time, 11:23, the day before Thanksgiving, I say, don't sell the euro. Start buying the euro. Maybe I'm wrong. Now, I don't know which one is going to be the limit. And I say to you guys, and I saw some of you guys in the private. I mean, exactly. I say, I won't do it like fading right here, but I would say, wait for the first 5 when you see the RSI confirming the 5 and buy the 3 bags. Wait for the 15-minute chart. Now, look, wait for this, guys. Be smart. Right here, he went from 31.50 to 33, 200 picks, but guess what? You could have taken at 32. But you have a defined risk. Wait for that. That's going to happen. Turn on the TV, turn on Twitter. That doesn't work, guys. I mean, when I learned Elliott Wave. There were no Twitter, nothing like that. I'll be honest with you, it was a much better trading environment than it is right now, in my opinion. But this is corrected. Like I say, if Elliott, I know some of you guys gonna be laughing about it. If Elliott when no computers and everything, he's gonna see this structure, he's gonna see like 3 and 3. He ain't gonna see it like a 3 and 5, in my opinion. Because it's not a 5-way. That's not a 5-way. In any structure of the dollar is a 5-way. Any. Zero. Now, they can drop? Yes. They can drop correctly? Yes. That we are presenting counts when they can drop correctly? Absolutely. But that's just the way that I believe it should be seen, in my opinion. Now, let's move on pretty fast to another pairs. Let's start with cable. We've been saying all week, saying Monday, cable to 54.85. And guess what, guys? It looks like that's going to be the area. Way structure-wise, it looks very completed. I mean, the counts has been almost perfect, or every count. But right here, I can see in cable 1, 2, 3, 4, 5, 6, 7 swing. I can prove it on the RSI that that's a 7 swing. I can prove it on the RSI. Nothing is saying there is no a 7 swing. Again, you cannot label it as an impulse. Why? I'm sorry. Because look at the divergency on the RSI. Look at the divergency on the RSI. Look at the divergency on the RSI. This is telling you that this is a 5, a 5, and a 5. And this overlap right here. So, thank you. I mean, what else I can tell you guys? That it can drop into the E way? Absolutely. Into the D way? Absolutely. But it looks like 1, 2, 3, 1, 2, 3. Target 154.85, which is the 76% of the previous recovery, and the equal less here. And I believe it's also the 1.618 of the first two, the 2% equal legs. So look at the RSI. You have the first leg do not have to give you divergency. But the rest, divergency, divergency, divergency. Overlapping here. That's not a 5. I'm sorry. That's not a 5. That it can become in a nest? Absolutely. 1, 2, 1, 2, 1, 2, 1, 2. Then you got 4 nests. That's another thing. Now, cable is going to bounce. Again, what you need to do as a trader, wait for the recovery and wait for the recovery to prove you correctly. And I'm sorry. The recoveries, guys, give you the degree of the bounce. The recovery, let's put it this way. Let's move on 1 second to the cable on the 4-hour. This is the 8-hour in cable. Look, what I mean with the recovery give you the degree is this. Let me put the candles 1 second. is this. You see this candle coming out of the low here? Very powerful, right? What do you think, what you guys think is telling you? That the recovery is going to be big. You see this candle coming out of the recovery? Powerful. Recovery big. Sometimes right here was like a B S wave flat. That's why you see that candle. But I always check as a trick the first candle coming out of the recovery, out of the low, the high, always give you the degree. Now, cable can be an A, B, and Z, or cable can be like this. This is a steer. We are steering D. Same with the euro. And then now it's going to do this. Getting back here and lower. Because this is no an impulse, in my opinion. That's either 7-wave or a nest. A nest can be possible, yes. And then if it's a nest, when you see the recovery, you're going to see standing the recovering start to get weak around this area. You're going to notice that that's a recovery, a nest. And then you sell it and need acceleration to the downside. Now, let's move on to the cat. Very interesting area cat is. Cat is at the 76.4 of the previous decline. And also, according to this count, I believe there is on the equal legs of the 1.236. I see cat very, very, also very complete, showing a three-way move. Remember, three-way move of this magnitude should erase divergency on the RSI in the 4 and the 8 hour. You should not have divergency. You should have divergency in 1 hour. And then when you downgrade the RSI, you're going to see the individual divergency. So technically, same scenario. It's a repetition. It's the same in every pair. To be honest with you guys, if anybody wants, selling the cat right here with a stop at 106.53 can be a heck of a trade. If anybody want to take it. Even better than the euro. In some degrees. The same with the Aussie. I think that most of these pairs, most likely, they have found the top or the bottom. It looks like euro did 5 swing from the lows. This is Aussie in 240 minutes. Again, at the 76.4. And then looking at the RSI, it raised the divergency on the 8 hour and 4 hour. That's the way a three-way should be. And like I mean, put it this way, zero divergency here, zero divergency here. We are around the equal legs when this is kind of 1.236 this. But again, guys, when these things become like this, follow the last cycle and trade against the last minor cycle. And then from there you go. But Aussie can drop. I believe that looking at the daily and the Aussie, I believe that most of the pairs, they're going to take the same path. I mean, it's hard for me sometimes because I like to be perfect in this. I still see the 7 swing. I can still, I still see the 7 swing. And until this low is not taken, I want to keep the same count. But this can be A, B, C, W, S, A, B, C to here, or this can be A, B, A, B, and then we are in the A of the Y with the bounce coming. It looks bearish, of course, if you're gonna look at the dailies and the weekly, looks bearish, but also very hard to count it as an impulse from the top right there. Very hard. It's not the most friendly count, and like I always, if you guys follow me, I always try to go with the most friendly count. What I mean with that is without forcing any type of bias. I think that right here, calling this like a correction, it can be the case. I still remember the 7 swing here, but like I say, even here, I challenge everyone to do that. Look. This is a significant high. This is a significant low. Now, you can see here, 1, 2, then put the other side, 1 second. You can say that right here in the 5 wave from here. 1, 2, 3, 4, 5. Everyone agree? You agree, Davey? Right here. Look. That this is a 5. Looks like. Now, from there is when the thing started. Because you can see also 1, 2, 3, 4, 5 swings here, a 6 and a 7. Then you can label this as an irregular, and you can label this is 102, 101.99. You can label this as another irregular. But if this is 1, let's play that you want to be bearish. 1, 2, this is not a wave 3 of 3, a wave 1 of 3. You guys agree? Then right here you don't get divergency. It get back, and now it's giving you divergency against this high. And then you cannot call this related to this 1, 2, 3, 4, 5. You cannot do that because the high here, the high here is higher than this one. And then you have to go with A and irregular B, and then you can go like this. What about the 4-hour chart? What do you mean with that? Doesn't say nothing. It's the same. No, we haven't decided, Dana. We're gonna make a decision later. If the euro pound is still valid, but you know what I mean. This cannot be 1, 2, 3, 4, 5. This high higher than this one. Do not have to show divergency, DV. A 3-way move do not show divergency, my friend. Divergence is only show in a 5-way move. It's not when only you show the divergence in a 5-way move. But look at an hour. because in the hour you see that, because you see the subdivisions. That's why you see divergency there. Look, phi in regular, phi in regular, and it looks like this is a whole move, phi, from here to here. Then you got A, B, Z. Very clear right there. I cannot call it another way. I won't call this a five-way move. It's not being a contrarian. It's doing what I do for 11 years. And the RSI, it has everything but being an impulse, in my view. Any question, guys? I think that let's cover the euro pound. Let's cover the euro pound. We have a proposal trade last night. And I got to work on the structure here. Let's see the RSI. From the lows, it was clear. From the lows, it was clear that you have three, or possible 5 here. But I don't know. I would rather go with a 3, and then 3 triangle in the middle and the truss of the triangle. And then from here, I start questioning as a 5. I was expecting another high. And then this kind of makes me kind of nervous, because this can be A, B, C, W going down in the S and going higher. If you're expecting a bounce on the euro or the bounce in risk in general, this pair won't trade lower, most likely. So another thing that brings my attention, well, but that doesn't mean nothing, is that they stare at the 1.236. And most important is it can be nesting. I don't deny that. Let me see. I agree with that. I agree with that. I agree with that, David. I mean, technically, you're looking at the RSI. It can be counted as a 1, 2, 1, and then possible in a way right here. This looks like a 3-way, which is the most important thing coming out of the low. I mean, let's see, maybe we adjust the stop, and we take a shot around here against this high, because about this high, it's gonna deny the downside, and then it's gonna go higher. But this is, I mean, maybe if that's the case, maybe it's A, B, C, W, S, A, B, C, Y. And remember, this is a cross. The only thing that this is saying is that the cable is going to be stronger than the euro when it goes to the downside. That's it. Do not means that the euro is going to be, I mean, yeah, do not means that the euro, it means that the euro is going to outrun. Going to the downside means that the euro is going to outrun cable. To the upside, meaning that it's going to run to the upside. To the downside, that it's going to run into the downside. Now, any question, guys, about any pairs that you guys want to cover? There you go. You should add that question to DB. That's DB pair. They're asking DB about the Aussie New Zealand. We've been tracking that pair the whole week, since last week, to get short on it. But sometimes, guys, I got to admit it, I'm too busy. Look at that. It looks like it is possible to be in wave 2 of 3 coming down. Now, DB being all over this pair for the last 2 weeks, I believe. And I've been trying to short it myself, and it looks like it left without me, some degrees. I've been telling the same things because it's going to be easy. The same things that we've been saying. It broke, I believe. This channel right there is very important. Now, this is on the daily chart. It looks like 1, 2, 3. It looks like right here, like I did a flat. 1, 2, 3, 1, 2, 3. And the other one right here is the flip, like a wave 2 flat. Is when this pair should be. Now, what this pair means is that Aussie is going to be weaker than New Zealand if it goes to the downside. That's it. Now, all you need to matter now, my friend, is from here to here. Don't you agree? For do that, let's reduce a little bit the time frame. Let's put the RSI, and you guys can see two things. First, it's either 1, 2, 3, 4, 5, 1, 2, and then it was as a leading diagonal, we count better, DB, right? 1, 2, 3, 4, 5. Yeah. Because I remember we went very deep on that pair. Yeah. 1, 2, 3, 4, 5, a flat 2, most likely, and then you got to play for the feeble from here like this. It goes to the 2% at the top right there. That's one possibility. And then you got 3, a flat 4, and higher. That's one wave. And then from here, or the other one was a triangle, I believe. From here, 1, 2, 3, 4, 5. Now, I have to tell you something. This is the higher read on the RSI. Right there. That's the higher read on the RSI. And there is a possibility to be like this. Gotta tell you. 1, 2, 1, 2. No, 1, 2. It's better if you count it like this. 1, 2, 3, 4, 5. It's better like that, in my opinion. Now, let's take a look to the decline. Amazing pair. So Sunday night, I was sitting here. I got to admit it to you guys. Debating to take the short. It's amazing, the price action, because look, 1, 2, 3, 4. You can count as a 1, 2, 3, 4, 5. Let me see if the 3 is the shortest of all. Yeah, you can count it like this. You're sure, right? Assuming you're sure. Everyone is sure this pair. One second. What I'm going to be passing. Let me show you DV count. He just sent it to me. This is how he's laboring. 1, 2, 1, and doing like an irregular wave 2 right here. You see it? That's how he's laboring. Now, let me see what I see myself. The 1-2 is clear right there, or AB is very clear. Look at this candle. Oh my gosh. Yeah, it's either nesting or a three-way. But this low right here, I see 5 swing. That's why you see also, DV, right? 5 swing here. Yeah, but there is no divergence in this one and neither in this one. It's a three-way. I'll be honest with you. I think that the risk is right here at 3208. And then if you want to sell it, that should be your stop. Otherwise, it's going to go to a new high. That's my opinion. And there is a possibility right there. If you go like in an 8-hour chart, let me take this, because I remember, no, but I remember that, remember, David, I was calling like a 3-4, like you want to make another load that I told you, at least 130 is going to be tradable, remember? But I think that then I went very deep and I didn't see it. 1 second. Yeah, I remember now. It's like this. 1, 2, 1, 2, the 3, triangle 4, 5, a 4, and a 5. That's the only change that the bulls have right there, in my opinion. Otherwise, it's going to go like this. Yeah, that's why. Look, 1, 2, to the peak right there on the high at the 2618, and then the triangle, and then trusting for the triangle here to ends 3. That's the case. That's I remember now. That's what I told DV, that at least 130.71 can be in place. Remember I told you that. That's what we see in that pair, guys. But that's a great short. Don't get me wrong. That's if it bounce from here, the next high, you should sell it even stronger than this one. That's a great short right there. Yeah, you know, DV, the entry in DV is like right here. And we have the entry. We have the entry, if you guys remember. Guys, don't have an idea how we want to provide more trades to you guys on the daily basis? But so, I mean, we are going to hire it. DV is going to start working with us and full time very soon. And hopefully with more help, we can provide more trades to you guys. So any other question, guys? One second. 1 second, guys. I lost something here. One second. Amazing when these things. Any other question, guys, that you guys want? 1 second. I lost. Hmm. And no, okay, guys, if there is no more questions, then we're gonna leave it there and get back to you guys in the room on the later day. All right, so let's leave it there, guys. Get back to you guys. Thank you.